As the COVID-19 vaccine is rolled out and more people head back to the office, experts believe the condo market will rebound. What? Experts believe the condo market will rebound. Yeah, it does say that. In fact, it may already be happening. What? Good morning, investors. Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. If you're like me, you're looking into the new year now. You're starting to plan, what is 2021 going to bring in our real estate market here in the GTA across Canada? And today is a great opportunity for us to have this discussion. I, as a broker and an investor, want to know for myself and my clients, where are there going to be opportunities? What comes next? Well, here's what we're going to talk about today. What is the Canadian Real Estate Association's average price expectation for Ontario in 2021? We're going to cover that from a couple angles. And then this question on the foreign buyers tax, which has been proposed by the federal government. Should we be pushing foreign buyers away or drawing them in? Canada has one plan of attack, but we're going to look at another country with a different approach and really discuss what's the best case scenario for our country and for real estate prices. And then when we're kind of deciding, do we want to invest in downtown Toronto? The question is, what are the big wigs doing? Are they in favor? Are they in favor of downtown, or are they fighting against the downtown core? There's been some major moves happening at the REIT level, the developer level. We're going to talk about some of those things, but thank you to all of you, our family of listeners. You guys have been tremendously encouraging. I was looking at the numbers. We have over 190 episodes since February this year. That all came out of the pandemic. With all of these things going on, that makes about 17 episodes per month. So we're having a lot of fun. Of course, if I wasn't enjoying this, we wouldn't be doing it anymore. So we like to have some fun along the way. Make sure you hit that like and subscribe button and continue to follow us for more. So this summer, like many people in lockdown, because we're going into another one, we're going to talk about that. But looking back over the summer, I've been, like most of you, getting my clothes online. My neighbors now, they take their washing in at night. I mean, they're nice folks. They really are. I think they're Latino, because they've got a 4-year-old who's learning Spanish. I guess he should already know it, but that's my guess. But he still can't say please, which I think is poor for 4. All right, let's jump into it. I know sometimes the jokes aren't funny, but if I'm not having fun, you're not getting the news anyway. So it's a give and take relationship around here. All right, so what is the Canadian Real Estate Association's average price expectation for Ontario in 2021? The top article of the day when you look up Toronto real estate is this Toronto Stories article called Average Ontario Home Prices Could Rise More Than 16% in 2021. This is their forecast. We're going to dive a little bit deeper below the surface because I don't care about the overall stats. But when we look at the national average before we bring it closer to Ontario, nationally, they're expecting a price rise across our country of 13.1%. Reflecting a current balance of supply and demand, which heavily favors sellers in many local markets, including, but not limited to ours. In Ontario, they're expecting sales from 2019. So when we look back the last 2 years, because 2020 is a wash, we're going to talk about that in a second. But since 2019, we've seen prices up, sales up, that is, 9.2%, average price rising 17%, they're expecting since 2019. But let's draw it a little closer, because when we look at 2020 levels, in fact, sales, home transactions in Ontario are actually, they're down. There's a decline of 3.3%. So wait a minute. All this talk about sales are hot. Technically, year over year, they're actually in decline when we look at the stats from November. However, average home prices are expected to climb 16.3%. 16.3% this year. From year over year. So how is it we can have sales coming down overall, but we can have price at such a high capacity? Listen to this. I love how they explain it here. This forecast comes as Ontario's housing market was down on a year over year basis in November. However, this reflected a supply issue rather than a demand issue, particularly in the ground home segment. This has led to the average home price in the province remaining up year over year. So perhaps the sales being down is the reason that prices are up. Fascinating. Sales are down because there isn't enough to buy. Not having options is going to push the prices up more and more, which is the same reason I feel bad for the olive oil industry being prohibited during the lockdown. Only essential oils can be bought. If you're new here, this is what we do. This is what I do. What's next? Starbucks are going to close 200 locations, and then what? I'm going to have to walk across the street to get my coffee, right? Make sure you hit that like and subscribe button if you've been following us. I know a lot of our listeners are actually non-subscribers, which is interesting. The majority. You guys like to come for the content, but stay a while. Visit. If you're really liking the content, share it on Instagram. You can also get on our investor list. Haven't sent a listing out in a while. I'm working with a partner right now to start getting more consistency on off-market deals here in the GTA and apartment deals. So you can jump on that. That's in the comments down below. So when we look year-over-year gains in November, what markets have done the best? So we're going to break it down. So the markets that have seen a 25 to 30% increase, we're looking at Quinte, Tellsonburg, Woodstock. Interesting. And a number of Ontario cottage country areas. These are the ones that have outperformed. Now, as it relates to price, in the 20 to 25% range, we have, so as we're going down this list, clearly you have your top performers at the top, right? So we've got Barrie, Bancroft, we got Brantford, Huron, London and St. Thomas, North Bay, Simcoe and District, Southern Georgian Bay, and Ottawa. Next down the list, 15 to 20% price appreciation. We see Hamilton, Niagara, Guelph, Cambridge, Grey Bruce, Owen Sound, Kitchener-Waterloo, Northumberland, and Peterborough, and the Kawarthas. And at the bottom of the list, which is a 10 to 15% increase, mind you, we see Oakville, Milton, and Mississauga. Crazy some of the stats. That range, that is some tremendous price growth that we've been experiencing. And Royal LePage, to add to the CREA's forecast of 17%, predicts median price of a standard two-story in the GTA will rise 7.5% next year, reaching an average price of $1.18 million. In a significantly less dramatic increase, the median price of a condo is forecast to increase 0.5%. So still a bit of dire predictions coming out of the real estate boards so far for condos, but we're not going to leave it there. We're going to talk a little bit more about that in just a minute. But what's the counterpoint, right? Because that's coming from the Canadian Real Estate Association, from Royal LePage, definitely in favor of success in our real estate market. Well, what if we were to report this from a newspaper that's maybe not so excited about price increases, namely, my friends, Better Dwelling? Here's what they have to say. Canada's talking about the same stats. Canada's real estate industry expects next year to be slower than this year, but still sees massive price growth. So see, they're reporting the same thing, but it's got that connotation, right? Ontario real estate prices are expected to lead home price gains at the provincial level. CREA forecasts the average sale price to hit up 16.3% from 2020 levels. The industry expects 2020 year to finish up 17.1% from last year's average. Listen to this. In 2019, prices only increased 6.3% from the previous year. So these are very ambitious forecasts. I mean, we saw a forecast of 7% of the GTA coming out of Royal LePage, and that seemed ambitious. Now, all of a sudden, we're stacking up 17% in Ontario. My goodness. Can we just be honest, right? Let's just be honest. Even the most negative news sources right now can't spin this story. They can't. It's like that random work from home business that you started. The selling tiny yachts out of your attic business. Sales are going through the roof. And of course, the other stat that we mentioned in our last podcast that I think is worth reaffirming here, because it's funny, we've come through the first lockdown. Whereas mayhem on the streets, complete fear, total, like the whole reason the podcast started was to get some clarity on the market. And we've been optimistic all the way through. Now, CMHC is also standing in some ways in support of the local market, although their predictions are negative. So this is why I find this interesting, because you would think CMHC is being neutral, right? If we're going to assume that they're being negative on one side, then we have to take the optimism on the other. Listen to this. Towers keep going up and condos are sitting empty, provoking the incoming vacant home tax, which we've talked about. But the CMHC housing market assessment says the Greater Toronto real estate market is showing low evidence of overheating, price acceleration, overvaluation, and overbuilding. And again, we did talk about this in the last episode, but why not? This is what we're going to add to that. Why not? Why are we not overheating? Why are we not overbuilding? Listen to this. GTA sales to new listings ratio went up to 60.5% in the third quarter of 2020, but remains well below the 70% threshold for overheating real estate market. The SNLR for condos was, I got my head stuck here. Got to get wireless. For those listening on audio, I actually just kind of caught myself on my headphones. All right, reset. Let's go. So really what they're looking at is the sales to new listings ratio. So although the CMHC's models also say there's low evidence for overvaluation in the GTA, the report points out the price levels are inconsistent with, quote, economic fundamentals like the pandemic era job losses. So they don't love the stats, but they're not going to go to say that it's overheating. So last point here on condos on this article. As for all those condos in the sky, the CMHC report says there's low evidence of overbuilding because the number of completed and unabsorbed units per 10,000 population and the purpose-built rental apartment vacancy rates are below critical thresholds. So maybe, as we've kind of planned into 2021, the forecast is this idea is you're going to have a ton of new condos coming on the market, but according to CMHC, maybe it's not as big a problem as some initially thought. That'll be interesting to see. But coming from CMHC, I think it's important that we recognize maybe that's not a problem. Though it's been one of the bigger problems, maybe it actually isn't. Condo owners have been very, very patient. They're the ones buying out all the macaroni products at the local grocery store because a nice bowl can pass the time quicker. All right, let's move on to our next topic, the idea of the foreign buyer tax across Canada that we heard from the Trudeau government. Is this the right plan? A lot of the reports that I've brought, a lot of the news we've talked about has been very optimistic. Yes, let's do it. Let's do it because they're overbidding these. They're making the prices way too high relative to the income levels. And we can see that in the GTA. Let's do it. Across Canada, no big deal, right? Lockdowns across Ontario, no big deal. You guys can all pay in equal proportion. Well, I love this BNN Bloomberg article because they talk to kind of the other side and they say, well, maybe that's not the best idea. And then I want to give you another example of maybe there was a different way. Maybe we don't have to go down this road. The federal Liberals did not provide specific details will get in the way of economic activity and housing supply growth. These are some of the critics saying that. We're going to get in the way of housing supply growth. We're going to get in the way of economic activity. You're putting a hold, because if these guys are, let's say, going to buy pre-construction units, for example, you're interfering with that. So here's the counterpoint. They interviewed Andrei Pavlov and his dog, professor of finance at the Beatty School of Business at Simon Fraser University, who specializes in real estate risk management. Sounds like pretty official to me. The 15% foreign buyer tax in BC that took effect in 2016 hasn't achieved its goal, this person says. That tax, along with the Vancouver's vacancy tax, has brought negative revenues for the government. This is a direct opposition to the points that we've seen so far, because BC is being praised by the federal government, by other provinces for the success of their programs. But here we have someone saying it actually brought negative revenues. Quote, the speculation and vacancy tax in BC was supposed to generate $185 million, as stated in the 2018 budget that Pavlov said in an interview. The drop in property transfer tax revenue in 2019, on the other hand, was $225 million related to 2018. Taxes were also a disincentive to build, an impediment to economic growth with subdued construction activity that would normally generate jobs. The loss of construction activity could weigh on the housing supply needed and affordability. So immediately it could affect very quickly the overall affordability because we're not building. We don't have an incentive to build, even if it's at the cost of foreign ownership. And an issue he expects to see nationally if the foreign buyer tax is rolled out. Quote, the impact will not be uniform across the country. In a perverse way, the negative effect on housing affordability would likely be highest in the areas that are currently most affordable. Interesting. Pavlov argued the focus should be an expanding supply rather than constricting economic growth through taxes. I love that general principle. As a conservative kind of guy myself, why are we adding more taxes? Is there scenarios where adding more taxes are really going to help our cause? Is this the approach that we want to take? And he says, instead of micromanaging the housing market, introducing more taxes and regulation, we need to remove the current obstacles to vast supply increases. So we need to create a platform where we can get as much as possible increases in supply. One day, liberals will finally understand how economics work. That's kind of rude. I'm sorry. During this lockdown, I'm really working on being less condescending. And condescending is when you talk down to people. All right. So let's look at the opposite point. because we are balls to the wall in adding a foreign buyer's tax across Canada. But is that their only method? Is that the only plan of attack? No, it's not. Because there actually was a report that came out of Australia. Listen to this. Australia will pay foreigners up to $50,000 to buy a new home as Perth market set to boom, right? And the virus is very much a global issue. We need to stay competitive here in Canada. Fake news alert. Pakistan's capital city, Islamabad, has extended the ongoing lockdown for another 2 months. Things have gone from Islamabad to Islamaworse. So right now, this article says Chinese buyers are being lured back to the Australian property market by generous government rebates of up to $50,000 on a new home, which calls to extend the incentive schemes past their expiry dates next year. And this is not just for Chinese buyers. Australia will pay Chinese, Australia will pay Hong Kongers, they'll pay Malaysians. Doesn't matter where you come from. It's all in the interest of supporting the economy. Interesting. Listen to the rebates. Western Australia currently has the most generous incentives available to non-citizens, with a 75% rebate on the foreign buyer duty for off-the-plan or new build purchases, capped at $50,000. In Victoria, rebates of up to $27,500 are available under the land transfer duty waiver scheme. This is what they say. Because of the pandemic, most foreign buyers don't know about these incentives. When we explain it to them, their eyes pop open. Buyers are rushing for us to get their deals done before the deadline expires. Ms. Chong predicted the incentives would shift overseas buyers from other parts of the country to Western Australia and to a lesser extent to Melbourne. Interesting, these thoughts. We also have this dude, Jawway IQI co-founder George Schmile. I don't know. He's smiling at the camera. CHMIL. I don't know. My ignorance is unending. Quote, sounds strange to pay foreigners to buy homes in apartment is in fact makes sense. Listen to why they like this. You don't have to just tax these guys because it caused problems. In fact, to give rebates, in a sense, they say, which I don't know if I agree with, but interesting that we've got this concept, that it actually makes so much sense. There is a triple win, they say, for Australia. These incentives will reduce housing shortage because we've got more people picking up new units, stimulate the economy with construction jobs, aka also leading to taxation, right? And protect the housing market from a sharp fall. If in fact we have a crisis in housing, it prevents and protects that too. Not to say this is something we need to apply to Canada, but to recognize people are running in the complete opposite direction in other parts of the world and are equally smiling in the same way that we are running in this direction. Whatever that is, I think it's important we recognize the pluses and the minuses before we get all gung-ho about applying this across our great country, Canada. All right, we're going to move on to some hot topics. Make sure you hit that like and subscribe button on this video, please, if you could. It helps the analytics. And don't forget our investor list, guys, if you want to get in on some of these deals. All right, lockdown. Number one, the government is reinstating the lockdown period for anyone that drives. Car owner virus, something like that. On the plus side, the last lockdown, my origami skills improved tenfold. So I thought, what's the best way to talk about the lockdown other than from a real estate perspective? In fact, we got an email from Sean Morrison, the Ontario Real Estate Association president, and I want to share with you the highlights of what they have to say, how this lockdown will affect us as realtors and the real estate industry as a whole. Here's what he says. This afternoon, Premier Doug Ford announced that Ontario would be placed into a COVID-19 province-wide shutdown. It'll start on Boxing Day at 12:01 and be in place for all of Ontario from December 26th to January 9th. The restriction will remain in place for all 27 Southern Ontario public health regions from January 9th to January 23rd. We ain't getting out of this puppy till the end of January. Where's my vaccine? Hit me up, doc. Right? I know that's going to cause some problems out there. People get so offended about vaccines, man, on either side. Just chill, daddy. All right, so what does it mean for real estate? Real estate continues to be listed as a, quote, essential service by the province. Very much like the first lockdown, except now without all the freak out mode. Now, what they asked us is to avoid face-to-face interaction with customers and clients unless it's absolutely necessary. You're going to see a lot more virtual tours, a lot more virtual showings. Open houses are banned, including for pre-construction in the whole province for 2 weeks and in Southern Ontario for 4 weeks. Workplaces must screen their workers or essential visitors. Indoors at real estate brokerages, for example, you have to have your PPE. It all makes sense. None of that is really a whole lot of news for us in Toronto. And as a real estate industry, it doesn't change a whole lot. Couple fun facts. Short-term rentals can only be provided to individuals who are in need of housing. If you got a house, no vacay trips there, folks, right? All of these interesting things. They also had this grant. They announced a new small business support grant. You can check it out. It's a one-time grant, a minimum of $10,000 up to $20,000 to eligible small business owners to help navigate the shutdown. I'll leave that up to you guys to do your research if you qualify for that. Applications are going to be launched in January. But this is how it affects the real estate market. Not a whole lot. I don't think the lockdown is going to change the way we do real estate much, to be honest. I really don't. People panicked the first time around until we realized society can still function. Back in March, I was super worried about my tight walking class would be canceled because of the lockdown, but it's all online now. Next hot topic, Toronto's first modular supportive housing project opens its doors. Progress is being made. What is modular? Well, you make it in a factory and it gets assembled on site. That's pretty much what modular is. Well, the first modular supportive housing project opens its doors on the weekend with 56 studio apartment spaces meant to move people out of the city's homeless shelter system. The full capital cost for the Macy and Harrison sites, the two sites that they're working on right now, were identified at $20.9 million in late October. But on Saturday, the city said the capital cost for all 250 planned units would be $47.5 million, more than double. So we got to get a handle on the costs, but I think it is a good thing we're helping the homeless. The city is also ironing details to spend $203 million in federal funding promised this fall by Ottawa for the acquisition of land, properties, and the construction of modular housing projects. The more cost efficient we can be on building these units, it's not a waste of money necessarily. It's a waste of this resource that we have available to help more and more homeless, especially as the winter rolls around. I think it's so important we take care of them. Last week, I offered a homeless guy an air mattress, and he was really thankful. He got really excited until I also offered him an air guitar. Didn't turn out so well. All right. A year in review. I saw this other article from cbc.ca. I want to give you a couple highlights. They're reviewing 2020 trends. And anytime I see value in an article, I'm going to bring it up. So first thing they say is the hottest region in GTA is Durham right now. That does not come as a surprise. In fact, Scott Ingram on Twitter had this very interesting post. And he said this: some weird sales things happening in December this year. Very weird. The share of freehold, that is non-condo ownership, basically houses that sell over asking, usually drops sharply this time of year. Because most of the listings are under 30 days old at this time, yet this year has stayed high. I guess that's actually over 30 days at this time. So what we're seeing is an unusual scenario where we actually have the share of units sold over asking not really dropping going into December. In other words, this December's market looks a lot more like a spring market, like a hot continuation of 2020 than it does a typical seasonal winter, which to me is concerning. You guys know I was really hoping prices would slow down. We get a little bit of easing going in the winter. I want normalcy. As an investor, I want predictability. This is chaos. This is chaos. People are turning into homebodies. They want a pool. They want home offices. They want a big kitchen because they're cooking more. So if they can't move, because we've seen a lot of options aren't available, there's not a lot of sales happening relative to last year, the Municipal Property Assessment Corporation, an organization that assesses and classifies the values of all properties in Ontario, MPAC, so that's how you get your valuation, your assessment for taxes. They also keep track of renovations. Apparently, there's been a 28% increase in the number of renovation permits this year as people invested in making improvements to their homes. Interesting trend, one we haven't talked about. We know people are spending more money on renovations. It's probably the reason that you see the cost of material going up, all this competition. Lots of competition. So what do you expect? People aren't allowed to go anywhere when it comes to renovating. Like, I don't know how we can expect this to go anywhere else. If you can't move somewhere, then you're obviously going to improve what you've got, especially when our incomes are higher thanks to government support. And so People aren't allowed to go anywhere. This is my joke, okay? Here's a joke for you before we move on, which includes most of us, except the exotic perfume salesman who lives on my street. He has no common sense. Stay indoors, folks. As the COVID-19 vaccine is rolled out and more people head back to the office, experts believe the condo market will rebound. What? Experts believe the condo market will rebound. Yeah, it does say that. In fact, it may already be happening. What? We said this a couple days ago. We're tracking it closely. Things are moving very quickly as we round into this new week, guys. Listen to this. John Pasalis Twitter post, a weekly look at the year-over-year increase in GTA condo sales. So this is where we're kind of trying to figure out, our sales going up, going down. Listen to these numbers. The week of November 29th, year-over-year sales increase were 9%. December 6th, they were up 23%. December 13th, they're up 31%. December 20th, they're up 72%. We had 3 months of inventory in November in the condo space. Now, today, we have 2 months of inventory. What? And modest price growth. Deal with it, folks. Deal with it. Oh, man, if we're going to call a bottom, I'm itching, man. I'm itching. Let's just put it this way. There's a tremendous opportunity for you to get a Boxing Day discount on your condo right now. And there is no guarantees as we round into the new year that the condos are going to stay low. Great news, by the way, for condo owners. Thank you for being patient. And how does this play out into the rental market? I'm looking at some of the stats and I can see week over week rentals, they're not going up, the number of active listings. In fact, they're going down slightly. So if we can get a solution in the rental market and a solution that's going to naturally turn into a solution in the for sale market, the sale market in condo spaces. This is fantastic news, by the way, for condo owners. Are we going to forecast a 0.5% increase in condo prices next year? I can see that maybe playing out for the first half because we're up against such strict and competitive numbers. But by the end, if we can get our footing right now and not waiting until the second half of 2021, as many experts are estimating, the condo market's going to be hot. It could very well be not as hot, but certainly hot. Certainly hot. All right. So when we're looking at downtown Toronto, outside of condos, let's look at moving into the city. Are the big wigs, those developers, the guys with these massive office spaces being leased out, are they betting on the Toronto proper, or are they betting against it? Right? I asked, because I'm constantly monitoring this stuff. I asked a Sears employee how their store had been affected by the lockdown, and they said, "What lockdown?" Oh, so funny. Poor Sears. All right, so let's look at some of these things, okay? So first article is Toronto Sun, TorontoSun.com. As is so often the case, you can bet the people who have been doing well over the past 9 months will continue to do well, so that demand will hold. Talking about a vaccines becoming widely disseminated and case numbers fall, business will start to return to business as usual. And these are all question marks, really. Office towers will fill up again. Immigration will pick back up. Population growth will resume. Pre-pandemic pressures will return to the housing market. Crazy to think that this wild time we're navigating our way through might, in fact, be the calm before the storm. I guess we'll see. In other words, what they're saying, the summary to this argument, is with all the chaos, the price growth we're experiencing, all of the tremendous numbers and opportunities of, call it 17% potentially next year, wild. Well, that is the calm before the storm. That's what they're saying. That's before confidence in immigration, confidence in vaccines, confidence in reopenings. Wait until those things happen. Well, this has developers in this article excited. It has developers optimistic about the Toronto market. And of course, there's going to be those who aren't too. I think it's important we look at both sides, but it's nice to get some good news for a change. Really is. The Globe and Mail article reads, developers bet on market rebound with massive Toronto complex. Oxford Properties and the real estate arm of Canadian Tire have announced plans for 5 office and apartment skyscrapers in Midtown Toronto as landlords bet on the market rebounding despite the pandemic, driving workers from office towers and slowing demand for downtown condos. They say this is the second largest office development in the city announced this month. The office vacancy rate has nearly doubled. This is another thing. This is why it's like, why would you do that? Because the vacancy rate in offices doubled to 4.7 since last year, with tenants big and small offloading space. Yet these guys are promising and hoping that they're expecting these things to do better. It's so fascinating. Oxford and other office landlords are betting. They're betting with their money. that workers will return to using corporate offices and that companies will continue to view Toronto as a top destination, with firms such as Amazon.com recently brokering large office leases in the city. They have not written it off. They haven't written it off. The housing units will be mostly apartments or purpose-built rentals out of the ones that they're building, with the majority of the units one-bedroom and studios, which is an interesting conversation we've had. You guys the city expects 2-3 bedrooms, get that missing middle out there. No, they're going to go where the money is. And unless you have a smarter way of planning this out, they're planning on doing, listen to this, 650,000 square feet of new office space, 2,700 new housing units, and 10,000 square feet of community space. That's what they're building. So that's the developers. Well, what about office space, right? What about office specifically? Well, as the year draws to a close, as a Toronto Stories article, and frost graces the ground on these brisk December mornings, one green bud of hope is pushing through the ice crystals downtown's commercial real estate scene. What a game changer, man. Like, have you heard any good news come out of commercial? I know I haven't. After sitting idle for the better portion of 2020 is stirring. This fall, Menkes Development announced that 100 Queens Quay East will be the new home of Richardson Wealth. The transaction has been described as potentially signifying the beginning of Toronto's office market recovery, as it is the first significant lease the downtown core has seen since COVID-19 struck the city. Crazy. Aren't you glad you joined in on this podcast today? Is this not optimistic news? Now, I don't want every podcast to be optimistic, but when there's good news like that, it has to be shared. I mean, we can't ignore the optimism coming out of the bigwigs. Quote, I think this announcement by Menkes is very positive. I think that there's still a strong demand for office. We'll see a shift going into the new year. It'll be interesting to watch and see when the vaccine is rolled out, how we continue to interact and be involved with office spaces. This is the question. Invest your dollars accordingly, folks. Are you going to run where everyone else is running, or are you looking for an opportunity to downtown? There's no wrong answer here. I mean, you're in the greatest city on the planet. So it's a win-win, but I want to win more, if you know what I'm saying. But hopefully you guys things aren't too complicated for you guys and your families. I know it's going to change some things. We're going to need to work with each other a little bit. But yeah, like for me, when we look into Christmas in the next couple of days, which we obviously have to do by ourselves, we're not allowed meeting with people in other homes. I know the one thing I'm going to miss more than even my family is that sweet smell of curry for Christmas, of the store next door. I don't cook curry for Christmas. It's not a family routine. It's because the Indian restaurants in my town aren't allowed to open. They were deemed to be non-essential business. Well, that's great. What a great way to leave off. Beautiful podcast. Thank you, folks, for joining us. I hope you guys had some fun and learned some stuff. Please leave us a comment down below, and I'll see you next time. Take care and keep it real.